traders. Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Today is the 13th day of July. It is Tuesday, and this is the daily report. Forex Gold is currently trading up in double digits, up around $15, $16 higher, currently trading at $12.1325. I've put a 2-hour candlestick chart up on the screen to kind of show you what kind of roller coaster we've been in. We'll go back to the daily chart to show you we are in a choppy, very, very congested area, but we seem to have found tentative, and I underline the word tentative, support at the $1,200 mark, which is a high psychological level. This is our daily chart in Forex Gold, and as you can see, since this sell-off that we witnessed, we had our first low that we hit, and this was right around 1188. We then made a lower low around 1186. However, when we made that low at 1186, we did open and close higher. So you can see this alternating pattern of higher closes and lower closes as it compares to the open, meaning red and black candles. We have been trading in this highly defined range right now with resistance at around 1213, 1214, and support just about. We know we have superlative support here at 1200, but real support right at that Fibonacci retracement level of 1187. And it seems to be trading very, very tightly within that range. Traders, what we need to do is to see it break one way or the other within that range. Traders, we're looking at a 30-minute candlestick chart, and I have put in a couple of areas where we have seemed to find tentative resistance as well as tentative support. The one thing that you can see is this is 1196 to around 1200, and this is that band of support that I'm talking about. Psychologically, 1200 is a critical level in the market. And in terms of resistance, you can see this one band of resistance right around 1206 and this other band of resistance right around 1212, between 1212 and call it 1208. Now, we have broken above that one point right now, but are now currently trading back into that area. In other words, this high right around 1217. The market has come down. Again, this is a 30-minute candlestick chart here, and as you can see, what we want to do is see if it finds some tentative support or then breaks back into this one area. One thing that you can see from this is we have absolutely had a roller coaster ride in this marketplace. Now, traders, you know, long term, absolutely, I'm extremely fundamentally bullish. Even with our down day yesterday of about $10, what I spoke about was the fact that this market is absolutely fundamentally driven. With the lack of fundamental news, the market will tend to trade lower. You will get a lack of safe haven buying. You will get a lack of buying the dip mentalities. You get a little piece of news coming out there, and you can see exactly how that has affected this market. The news today, of course, we had a lower U.S. dollar. We had strong gains in the crude oil market. But what I think really has drawn some safe haven buying into the marketplace today was the fact that Moody's again downgraded Portugal's debt rating, and thereby putting that whole euro debt crisis back into the limelight. As I said, we need to see this market run through its course of a healthy correction. Long term, I am absolutely bullish on this market. I am looking in the next 6 to 8 months for 1300, maybe 13 and a quarter in terms of the price per ounce of gold in US dollars. I think that we certainly need to weather this type of correction and this type of choppy trading activity. And as I said yesterday, it's really only going to take one piece of news to really fuel this fire. Now, this is according to the street, and it says that Moody's slashed Portugal's debt rating by 2 notches to A1 with a stable outlook stating that the country's growth prospects remain weak. Portugal, of course, follows Greece and Spain in a long line of struggling European Union nations that suffered downgrades. Although the news itself might not be a big surprise, the reminder that the Eurozone countries are still at risk despite recent budget deficit cuts reignited gold's appeal as a safe haven asset. Once we have a strong sense that we have weathered this correction, I believe that we're going to be witnessing and moving back into an impulse phase, and that impulse phase is going to carry this market anywhere between say $80 and $120 higher. I think that we have significant opportunities in this market. However, I think that the proper action at this point is to wait and remain flat in the market until we get strong signals and confirmations, and all traders, us as conservative traders, can re-enter this market. This has been Gary Wagner with WFGForex.com, your Forex Gold forecast for July 13th, 2010. Wishing you, as always, good trading. Bye-bye.